Yep. So good morning. This is Going Parabolic Coffee with BitcoinTina. We were chatting a bit before we began, but let's get this started. So I wanted to begin with, what does BitcoinTina even mean? Why all the anonymity?
Okay, BitcoinTina means there is no alternative. The reason for the anonymity is I think Bitcoin will reach extraordinary numbers in what most people consider to be a shockingly short period of time. I think Bitcoin can be $3 to $5 million of Bitcoin in the next 10 to 12 years.
Wow.
I think that it ultimately peaks out in today's value in the neighborhood of 20 to $50 million of Bitcoin.
Whoa.
Ultimately, Bitcoin will have all global store of value. And the real value proposition of Bitcoin is that it is something which is verifiably scarce and yet also liquid. That's a very, very special thing. So imagine, why do people buy works of art? They buy it because they're looking to hold value over long periods of time, but there are problems with works of art. What's the problem with a work of art? First of all, there's a fashion risk.
Yep.
And people don't necessarily think of that, but art is fashionable. Art goes in and out of style. Not all art is the same. What was popular 20, 30, 50 years ago may not be popular today.
Yep.
All assets except for money have idiosyncratic risk. You have a preference for them. You have a preference for real estate. You have a preference for stocks. You have a
Preference for the US dollar.
Well, let's come back to that. Let's leave that alone for a second. You have a preference for that. Money, by its nature, has no idiosyncratic risk. Nobody starts the year and says, this year I'm not interested in making money.
Yeah. Because
money is the asset for which there is a universal desire. It's with money that you buy everything. And so money is different and special in many regards. Money wants to go to one. What that means is money wants to be the only money, because you don't want to walk around, and this is sort of a silly, simple idea. You don't want to walk around wherever you are with dollars and rubles and pesos and krona and 20 different kinds of money. Money is not like stocks. And we often are confused about how we look at things because we take what we know and have been well taught in the last 30 or 40 years about stocks. We apply it to this area of money. And ultimately, Bitcoin is about money. It is not about stocks. And so,
well, let me just ask another question, because I'm
sure, please. No, please,
about
please.
this. So, Tina, Bitcoin is about money. I get asked all the time, what's the use case? Like, what do you do with Bitcoin? Is Bitcoin being used for its intended purposes right now? There is no other use case.
Yes.
I feel the exact same way.
Bitcoin's highest and best use case right now is actually simply holding it, or like we say, hodling it. That seems silly. Oh, you're not using it. But we do many kinds of transactions. We do transactions between ourselves and other people, but we also do transactions between our current self and our future self. The most important transactions we do are with our current self and our future self. Mm-hmm. So, to backtrack a little bit into an idea of economics, we basically have, in economics, there's basically two things. There's production and consumption. It's pretty much all there is production and consumption. Everything else gets all kind of messed up and confused. I like to try to take things and bring them down to simple ideas. Mm-hmm. So consumption can be divided up into basically two things. I can consume today, or I can consume tomorrow. What do we call consuming tomorrow? That's a question.
Saving?
We call it savings.
Yeah.
Savings is just postponed consumption.
Right.
So we are, with savings, doing a transaction with ourselves, and saying, we don't want to consume today, we want to consume tomorrow. And the reason we consume tomorrow instead of consuming today is for whatever reason we think that
Safety,
that value,
security, value accretion.
that value has more value
Yeah.
in a future period than it does today. If we,
Save.
right. I didn't plan on going down this line. I've had these discussions before, but I didn't plan on going. My thought process was somewhere else, so I have to.
No, it's fine. It's fine.
So
this is supposed to be casual coffee anyway.
Money is used for both transactions with ourselves and transactions with other people. Now, of course, you can complicate matters, and I want to keep it simple, because some of these are really hard ideas for people to work with, and it's easier to keep them really simple. Well, you asked me a question. Tell me the question you asked me one more time, because I lost my train of thought.
No, it's okay. It was really, isn't Bitcoin's use case of being money really its use case? Everyone's searching for this next use case. It's money's it's ridiculous to me.
Yes.
Like Bitcoin.
Money's an enormous use case. But
that's right. And the deflationary tendencies of Bitcoin make it kind of mind-blowing. So the scarcity, et cetera. I'm really interested in your thoughts about that, because I think it becomes this kind of word salad that people, when they define Bitcoin, and it really confuses people like you who are really steeped in economics and theory. And then the layman is just lost. They don't even know why they're participating in Bitcoin. 99% of people, I believe, don't really understand it, don't really understand what they're holding.
No, they don't. I agree with that. Mm-hmm. And I've actually done 4 podcasts with Bitcoin Magazine, a series of 4 episodes where I go into all of these different things in a lot of detail. It's like 4 hours long. And you can get a lot of my ideas there. I'm not trying to.
No, you said it's on Bitcoin Magazine. Yeah, it's Bitcoin Magazine podcast, BitcoinTina. I definitely recommend go check it out. I mean, I definitely will.
So I discuss a lot of these things. I really was thinking more narrowly than getting to in a lot of in-depth conversation here on these issues. But
I'd like to get, maybe if you would just fly above it and just give me your thoughts on why Bitcoin is so interesting to you. And then I want to move to just what is DeFi, because that was the genesis of our discussion. Right. And,
but it's important to discuss Bitcoin's inherent nature, because it's from that my conclusions about DeFi fall out.
Hit me with it, Tina.
So a friend of mine, CK Snarks on Twitter, mm-hmm. who works for Bitcoin Magazine, says that, backtrack a second, many people talk about when hyper-Bitcoinization happens. And I kind of think that's the wrong way of looking at things. We are actually in hyper-Bitcoinization now. Think of hyper-Bitcoinization not as an endpoint, but as a process. Mm-hmm. So they're going, and this is how I look at Bitcoin. Bitcoin is a process. It is not an endpoint. There will be an endpoint, in my opinion, where we're living in a Bitcoin-only world, but we're getting from here to there. So there are going to be various stages in the process. And many people are going to do whatever they think they ought to do. And that is the process of hyper-Bitcoinization. So if you make good decisions, you will be left with more Bitcoin and ultimately be much wealthier than if you make bad decisions. But understanding where it's headed and what it's going to become helps you to better make the right decisions to getting there. Because if you follow, I think that ultimately the Bitcoin will help to create and will create a new economic paradigm. And that paradigm is happening elsewhere right now too. Guys like Jeff Booth, Peter Diamandis talk about exponential growth. They talk about deflationary technology. Exponential growth is by its nature deflationary, and Bitcoin is a deflationary money because it's a fixed supply. Exponential growth, does that make sense to you? Is that
it does? And I'm really interested in how a deflationary money affects goods and services in the future. If Bitcoin was to capture all the money supply,
well, it's more than just money supply. It will capture
all value,
all global store of value.
All right, all value. How does that affect goods?
Well, no. I didn't say no. I said store of value. So
okay.
here's how I think about value. I break it up into two different types of value, and broadly speaking, I like to call it business risk and store of value. Mm-hmm. So stocks ought to be about business risk. Businesses have, by their nature, certain types of risk, which they will always have, because of what business is. You're building something. It's going to have cycle risk. It's going to have technology risk. Businesses have natural business risks. Most things have business risk, but what has happened because of the money system that we're in is store of value has leached into total value for many assets. So a question that I ask to prove to people that their money is no good is this. If you had to choose between putting a very large sum of money, large for you, it doesn't matter what large is for somebody else. For you, it might be much bigger than it is for other people. But you had to hold one of several assets for 20 years, couldn't trade out of it, had to hold it. You could hold dollars. That can be in money markets, that can be in bank deposits, in some form of short-term dollar holding. You could hold dollars. You could hold real estate, hold it however you like. You can hold gold, or you could hold stocks. Which one don't you want to hold for 20 years?
Money.
Can't sell out of it.
Money.
U.S. dollars.
U.S. dollars.
Not money.
U.S. dollars. That's right. You don't want to hold.
Why? Why don't you want to hold U.S. dollars for 20 years?
Well, looking back, this may not prove to be true, but I would say because of inflation.
Wait, okay, what is inflation?
Yeah, well, I would say money printing, right?
Well, increased money supply is what inflation is.
That's right.
Inflation is at all times and all places a monetary phenomenon.
Mm-hmm.
So if we're producing...
But Tina, I looked back, and I think it was in 2008 when we went through another kind of cycle, and Ben Bernanke and the team turned on the money printer and they 5x'd our money supply. You go forward 10 years to 2018, I was listening or doing some research on this. There was no inflation.
Actually, there's tremendous inflation.
Well, I missed it because it...
No, you didn't miss it. You didn't miss it.
Okay, where
inflation, inflation doesn't have to only be in goods and services, does it?
No, I would think.
Where else can inflation be?
If inflation's not happening in goods and services, hit me with it.
Well, you know the answer to this. Where else can inflation be? You don't think of it this way, but it can be in other places. Where else can inflation be other than goods and services?
I mean, do you get it in stocks?
Of course. Mm-hmm. Capital assets.
Yep.
You have capital asset inflation. Yep. Let's discuss for a second inflation. Why is inflation bad?
Why is inflation bad? I mean,
maybe inflation is not bad. So
if you're on the side
is inflation bad? What's bad about inflation? Why is it bad?
If you're holding the assets that are benefiting from inflation, I guess inflation's not bad. But if you're a consumer, you're kind of getting priced out of the market.
You're not answering. You're talking about the end results. But first of all, do you accept the idea that inflation is good or inflation is bad?
Well, I don't know if I've really thought about that.
I want you to think about it. These things matter. People don't think about this.
Yeah, I don't think I've ever really spent a lot of time thinking about, is inflation bad? I'm going to say no from my perspective.
Okay.
Simply because I hold a lot of assets that benefit in an inflationary environment.
Right. Okay. So
And that's just me. That's just
I understand.
me.
No. I understand. I understand.
Hmm?
That's the interesting beauty about capital asset inflation is it's incredibly seductive because prices go up and we feel wealthier. But to understand inflation, we have to examine inflation and understand what's bad about inflation. So I'll give you the end point and then we'll work our way through it. Inflation is bad because inflation naturally, the function of an economy is resource allocation. Price mechanism in an economy is the means by which resources get allocated in an economy. What inflation does is it basically messes up price mechanism. So if we've seen this in examples, we saw this with canals, we saw this with railroads, we saw this with laying fiber in different periods of economic history. If investments in some area, because your cost of capital is too low, if investments look appealing and you chase those investments, it results in massive destruction of capital. So we see this in various economic bubbles. If we've created a lot of money to make our cost of capital look artificially low, interest rates are cost of capital. Mm-hmm. So maybe interest rates should be 10%, but instead they're 3%. And so a lot of money flows into certain areas because it looks like it's giving a very good return, and our cost of capital looks too low. What tends to happen through the course of business cycles is that if we've mispriced the cost of capital, too much money flows into those areas. And then when the process of the cycle continues through, we find there's not sufficient demand, then those investments go bad and the capital gets destroyed. Inflation is fundamentally bad because of destruction of capital. Inflation tends to destroy capital that we need for our economy. The difference between consumer prices and producers' prices versus capital asset inflation is that consumer prices and producer prices actually tend to create that value destruction process more slowly than capital asset price inflation does. Capital asset price inflation is actually much worse for an economy and much more dangerous because of destruction of capital than even consumer and producer price inflation. But capital asset inflation, stocks going up, real estate going up, that feels good to many people, but not to all people. There are social ramifications too, but we'll come back to that in a second. Consumer and producer price inflation feels bad because we see the price of goods and services that we use go up, and we can feel that directly in our pocketbook immediately because we don't necessarily have a corresponding increase in income or wealth to pay for those goods and services. So that feels bad very quickly. So people are very concerned about consumer and producer price inflation. But the way capital destruction happens with CPI and PPI is through the income statement of businesses. So prices go up, other businesses see the prices go up, the margins look like they're good, and they go invest in those areas. They tend to overinvest in those areas, and then you wind up with the capital destruction of not having sufficient demand at some point down the line because you built too many businesses, you built too many tire companies, you built too many whatever business you want to talk about. And so you wind up with pricing problems, and you wind up with an inability to, you built too much productive capacity for what the economy can handle at some point. Because
Tina, isn't that going on right now?
Yes.
I mean, it's in a most perverted way.
Yes.
Mm-hmm.
So let's go. The problem with capital asset inflation is that process is vastly accelerated. And we tend to think in terms of stocks, but it's actually the debt markets where it happens in bigger size, because the debt markets are bigger than the equity markets. And when we do debt issuance, we're actually taking generally much more money. Most businesses are built with debt; they're not built with equity. Some businesses are built with equity, but for most businesses, the way the economy works today, people raise a lot of debt and they go invest and they go build out whatever they're looking to build out. Like I give the example of fiber back in the late 90s, early 2000s. You just asked me a question. What did you? Oh, so talking about the social aspect is actually really important, and I put that off for a second. So, if some people are getting really, really rich from capital assets, but it's not happening broadly because not everybody owns capital assets in your economy. There are lots of people who don't own stocks and real estate. Then the people who are benefiting from the increase in prices and value of stocks and real estate are able to buy more in that economy. And so the other people who don't own stocks and real estate, people who just have a job, get very angry and very resentful. And they're not wrong to be angry or resentful, because their money is no good, and the savings that they can save from their labor doesn't hold its value. Yeah. So the house that might have cost $100,000 a few years later costs $200,000 or $300,000. So their labor causes them to constantly fall behind people who have capital assets. So it not only is destructive, inflation is not only destructive in terms of destruction of capital in an economy, and capital asset inflation being worse than consumer and producer price inflation, because capital asset inflation is kind of hidden, because we like it when stocks go up if we own stocks. We like it when real estate goes up when we own real estate. But that tends to result in overproduction and it usually happens in certain areas. It doesn't happen in all areas, where capital flows in too great an abundance into those areas, leaving us with a subsequent bust. But the social destruction can be very dangerous to society. So this idea is what is often referred to as the Cantillon effect, where, and so central banking tends to promote a Cantillon effect. It tends to promote an inflation of capital assets over and above what they probably should be going up at with improvements in business, better technology, or more earnings from accessing new markets. Generating earnings is not what's driving your stock or your real estate prices. It's that large inflow of quote unquote money. Now that money may be credit, not really money. Credit looks like money, but isn't really quite money. There's some differences, but let's leave that alone for a second. Oh God, I was just going to say something and I lost my train of thought there for a second. So that Cantillon effect tends to produce a lot of anger because you wind up with a relatively small class of people who are benefiting to a much greater extent because of that influx of money, which is now flowing into those capital assets. Mm-hmm. I can't remember. I was just going to ask me a question because I was just going to say something and I forgot what I was going to say.
I'm interested to explore just a bit more deeply, the capital destruction that's occurred globally due to this phenomenon. So from my position instinctively, when you asked me the question, I knew there were two sides to it, in terms of, is inflation good or bad? You know, from my perspective, it feels good, but after listening to you, I may be a bit cowed by that, because some of the things that I'm banking on to appreciate could be falsely lifted up.
I know what I was going to say. Okay, I know what I was going to say now.
Yeah,
and
no
tie in the idea of store of value and business risk, business value, and separate those two things. So because we know our money is no good, and I think most people know and understand this instinctively if they have money. They know the money that you don't want to hold your wealth in dollars. You want to hold it in some form of asset. You want to hold it in venture capital. You want to hold it in stocks.
Right.
You don't want to hold it in dollars. You want to hold it in something else.
Yep.
So what's happened through the structure of the markets that we have is that the S&P 500 has become a substitute store of value. And so because people can buy the S&P 500 through various instruments and other indexes, they're attempting to minimize business risk to find some place to put their money, because they know their money over time will become worth less, not worthless, but will diminish in value, will have less buying power.
Yep.
So I think what has happened is, because money is fundamentally not good, is many investments that we make accrete more in value than they ought to based on their inherent nature. So a business which has average profits and minimal growth should not take on a lot of value, but some businesses which have extraordinary growth with extraordinary profits should take on greater value. But what happens is many people will buy the S&P and they'll just buy it automatically. So you might have a dollar cost averaging purchase of the S&P 500 every week, every month, every quarter. You might put it into your 401k. There are various ways that people will invest in the S&P. But what happens when you invest in the S&P 500 is you are no longer a price discerning buyer. What does that mean? It means you don't care what the price is. So when you go shopping, when you go food shopping, when you go into the supermarket, do you say, I'm going to spend $100, $200, however much I'm going to spend, and I don't care what the price of anything is in here. I'm just going to buy it. I'm going to go, and apples could be $40 a pound. I'm buying apples. I don't care. Apples mean nothing to me. I don't care what apples are. I'm just going to buy them, and I don't care what the price is.
Tina, unfortunately, I think that the answer is yes. Like I don't shop, but I think if my wife goes to the grocery store, she buys apples. I think if it gets
okay. So maybe that example may not fit you. Let me give you a better example. Maybe this example fits.
But I think that does not. I think most people are very price sensitive.
No. Let's change an example that fits you better, because you're a wealthy guy. You want to buy a new house.
Yep.
And so
there's a limit.
There are multiple houses in a neighborhood, and they're all pretty much the same house.
Yep.
But you just don't look at the price because, well, this house is exactly like this other house, but instead of costing X, it costs 10X. And you say, I don't care. I'm happy to pay 10X for the same house. Do you do that?
No.
Why not?
Absolutely not.
Why? Why don't you do that?
Because
that's a perfectly reasonable thing to do.
Because, Tina, I felt like I've lost value.
Okay. Well, that's what happens when you are buying an asset without regard to its underlying price.
And that seems like flawed logic.
But that's what we do in our markets today.
It's ridiculous.
We do that when we buy the S&P 500. We're just saying ridiculous. We don't care what the price of any of its components are. We're just going to buy this overall thing. And we're hoping we can get value for the overall thing. But
in the future.
Well, but we're buying it without regard to its price. We're just buying it because we're looking for a place to escape from.
US dollars.
We're fleeing our money.
Yeah.
Hyperinflation is actually fleeing your money. So we see that in some economies of hyperinflation in producer and consumer prices, but you can also have hyperinflation in capital assets. It may not be hyperinflation, maybe it's just an aggressive inflation where price of assets go up more than they should. And why do they go up? Because we know we don't want to hold these dollars or euros or whatever it is that we're holding. We have to push them out of our hands as quickly as we can and get something else that we hope holds value.
Yeah,
this
it's
is a
incredible.
problem. So store of value has leached into places where it ought to be business value or business risk, because we're desperately fleeing what we use as money. Because there's massive production of it. Does this make any sense?
Totally. And I keep going back to taking everything that you just said and putting it against Bitcoin. Now,
well, we're going to come back. We're going to come back to Bitcoin.
I'm sorry.
We'll come back. No. We'll come back. We'll come back to Bitcoin. But understanding the framework, how I see the world, will better help you to understand Bitcoin.
Yep.
Because if you don't understand money, you don't understand Bitcoin.
Yeah. So Tina, just help me if you'd share just a bit of personal decision making. So you obviously don't hold US dollars if you don't have to, and you probably have some real estate, some stocks, some bonds, gold. You just seem like that would be where you're keeping things. Or are you moving to 100% Bitcoin? You don't want to own anything.
I never discuss my personal investments.
Okay.
And with anyone in any medium.
That's fair.
But
that's fair.
I don't think that people should hold 100% Bitcoin because we still live in a world with price fluctuation. I think one should have, if you don't have a job, if you don't earn income, you should hold some Bitcoin in US dollars to take advantage of the optionality that exists in markets. Cash gives you optionality of purchasing at various prices.
Mm-hmm.
Or if you have an income, then you know the need for that cash is diminished because you have income which is coming in on a regular basis.
Yep. So you use your cash flow to cover your bills, and would this be a situation where DCAing into Bitcoin is a good strategy?
I think it's an excellent strategy.
Mm-hmm.
I think people think they can pick prices. Picking prices is actually a pretty hard thing to do. So look, if we knew the best price, you could just buy something all at once, and then just go from there. I mean, if you purchased at the bottom of any market.
But why is this different than DCAing into the S&P? Is it because
I'm not sure that it is different. Well, right. In terms of,
but I was going to say though, the price destruction or the value destruction in the S&P.
Well, no, I didn't say the value destruction.
Well, I'm saying
what I said. But it's not exactly what I said. What I said is that when markets send price signals. So what I'm saying is that when capital flows into the S&P, I don't have a problem investing in businesses. I'm not saying don't invest in businesses. So don't assume that I'm saying don't invest in businesses. I'm not making that statement at all. What I'm saying,
I don't think you did.
What I'm saying is that we are making those S&P purchases because we're not necessarily looking to invest in businesses. It's more of a negative choice of not wanting to hold dollars.
That's right.
That's what the choice that we're making. And it's not about the technical ways of putting in through buying all at once or dollar cost averaging. I'm talking about something very specific here. And what I'm saying is that business risk, total value is split between store of value and business value / business risk. And what I'm saying is that stocks should not be store of value. Stocks should be business value, business risk. Store of value doesn't belong in an investment like that. Store of value doesn't belong in real estate. And yet many people buy real estate because they don't want to hold their money in bonds. They don't want to hold their money in cash.
Yep.
And so they're looking for a substitute store of value. And what I'm saying is that those assets are very imperfect
because of bias. Because of bias and all.
Well, no, they are by their nature imperfect for store of value. Store of value belongs in money. It doesn't belong in business risk assets. And so when and the description about inflation and understanding of mispricing every asset, if the S&P goes up by 100%, some money will flow to different companies and sectors within that S&P, and sometimes it flows in ways which is reasonable, and sometimes it flows in ways which is unreasonable. But where we have that large magnet for attracting value, through the process that we've created, we tend to create wild overinvestment. And that's because when the bathtub is filling up with water, it's going to lift all boats, and we're repricing everything. But inflation by its fundamental nature is not uniform. So there's an underlying assumption of inflation. So give you a mental test here. If you had $100,000 in income and $100,000 of expenses, and we tacked on a zero to your expenses and to your income, is that inflation? And let's assume it's not just you, but it's everybody.
Look, again, I would say no I would say no, because you tacked on a zero on my income.
Right. And that's what I would argue too. Inflation implies differences in pricing. So haircuts go up some, buying food goes down. There's that differential. Not everything goes up evenly. And so I think if you were to take all your income and all your expenses, just tack on a zero, yes, there may be more money supply, but that's not actually how inflation works. Inflation discriminates amongst goods and services where the prices go up and down, similar to in capital assets, the same kind of thing. So inflation, we don't think about this. Remember what I said? I don't know if I said this before. I think I said this before. I had a professor who said, whenever we make a decision, we have to do the best we can to make our assumptions explicit to understand those decisions, because if our assumptions are wrong, our decisions will be bad. And so we kind of intuitively understand inflation, but we don't necessarily think about what is inflation. Inflation is an uneven rise in prices, uneven amongst goods and services or various capital assets.
Where your capacity to generate spending power doesn't keep up with the price of goods.
No, forget about that. That's confusing things. Mm-hmm. I'm just talking about the fundamental nature. Can we pause this for a second?
Yeah, of course.
Be right back.
Yeah, so Tina just stepped away for a second. Again, if you're liking this so far, I mean, Tina's the genius. These are kind of some of the backdoor discussions that he and I have, DMing each other. I mean, guys, just
I'm back.
Yeah, hey, I'm just giving you some props for a second, Tina. So
thank you.
If you'll like, subscribe, follow Tina, I do, and definitely check out Bitcoin Magazine and the hours of kind of logic and knowledge that he's shared with us, because I mean, this stuff is invaluable. So anyway, I'll stop.
That's very nice. Thank you very much.
This is my pleasure.
So we intuitively understand it, but we don't really think about it. So that inflation is those differences in prices that happens. It's not just the rise in price. It's not just the rise in money supply. But inflation wouldn't be bad if everything went up evenly. It's that when the money supply goes up, there's this uneven distribution of prices, whether they be capital asset prices, i.e. stocks and real estate and other capital assets, or consumer and producer goods and services. And we intuitively understand that, but we don't think about that. So that results in what I was describing before of capital destruction, because some areas, because of their perceived return, tend to attract more capital. And then when we've overestimated the potential demand, there's a bust. There's a huge bust that follows from that, because we mispriced the risk. We mispriced our cost of capital for those businesses. And then when the cycle proceeded through, there was insufficient demand to purchase the goods or services that we expected. But the mistake wasn't having insufficient demand later. The mistake was the overinvestment in the first place by following something which was fashionable or popular. And they may have been fashionable or popular for relatively good reasons, but it became overblown and it created a lot of capital destruction on the other side of that. So we have a fundamental problem with money. We have a problem with money, which is by its nature inflationary because we're producing more of it. I don't want to get into the discussion of credit versus money because it's a long discussion and it adds to confusion. But understanding this framework helps to give you a lens through which to see the world. So, as a person who doesn't want to have to make an investment decision, I would like to have money that I can hold on to and say, you know, I want to work. I may have a good job. I may have a great job. Maybe I make a lot of money.
You don't want the risk.
And no, it's not just risk. I
don't want to have to.
I'm not good at making those investment decisions. I'm bad at it, or I don't want to do it. I just don't want to do it.
Right. Why isn't it enough to just earn the money and it go away?
Right. So if I can put my money into something which will just hold its value and hold its buying power,
right,
I'm happy with that. I don't need
and live a conservative life and whatever it is you choose. But
I just don't feel the need to invest in other things. Well, that's what Bitcoin is. Bitcoin. In time, I believe Bitcoin will be the one and only money in the world.
Incredible.
But in that world, if you work and you earn an income, then you don't have to say, oh, I have to flee this thing that I'm holding because it's going to decline in value. And I have to go find some other place to take my labor and effort that I get paid money for and put it into something so that, I worked for 40 hours and it gave me X amount of dollars, but in that world it'd be X amount of Bitcoin. And I have to go take that money and go put it into something else because it's going to buy less in 3 years. So that's the answer that that's the problem that Bitcoin is solving. That's a big, 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 big problem. That's like the biggest problem in the world.
Right.
So that's a really big market. That's Bitcoin's market. That's why Bitcoin will be so incredibly valuable, because it is a money. It's not a money yet, but it will become a money which is fixed in supply. And it has other characteristics which make it an extraordinarily good money.
And essentially almost infinitely divisible.
Yes, it's infinitely divisible.
Okay. Yeah, that's true.
For all practical purposes, right. It's infinitely divisible. And if it's not divisible on the base layer, it can be made more so on scaling layers. So that I hope answers the question as to why I want to own Bitcoin. And because store of value has leached into so many assets, Bitcoin ultimately will take store of value back and take it and put it into money where it belongs. Not mixing business risk and store of value together in the price of assets, which has certain investment implications as well. So I hope that explanation
Massive.
Helps you in terms of your own thinking about how you look at this. So,
I mean, because think about this, Tina, to preface your discussion, you know, I felt instinctively inflation in my life is good. But after listening to the things that you've talked about, and again, I know I was torn in that question because I know it's bad. I know it's bad. But for the uber rich, and I'm not saying I'm uber rich.
No, I understand that.
Assets, you start to think of it like, hey, if we get into a hyperinflationary situation, I own a lot of hard assets, and not cash, gold, stocks, bonds, whatever, properties. Those tend to do okay in those environments, but are they falsely propped up because of leverage, et cetera? It really causes you to think, is there a better option? And why do I have to take the dollars that I've traded my life for through trading time for dollars and put them at risk? Like, I wish I didn't have to do that.
Right.
And I don't, it seems, or it may be.
And in my opinion, you ultimately won't. We're going through, this is part of hyper-Bitcoinization. Mm-hmm. That's what this whole process is. And it will take a lot of errors on the part of many people along the way, in my opinion. But I think having a framework for understanding things really helps you to focus where you want to be as an investor, quote unquote, in this space.
I love it.
Which I hope I get you to rethink after the conversation that we have.
Tina, I'll tell you, and I'm so fortunate and so thankful for you to take the time to speak with me. These discussions are my sharing of my own learning process. You know, I want to understand why you're not just pro Bitcoin, but you're like a perma bull Bitcoin.
I think Bitcoin is insanely cheap at these prices. I think it will have values which are just incomprehensible for most people, because the end result will completely remake society. You know, so that problem with inflation is, and God forbid a hyperinflation, it's going to destroy your friends and neighbors, and people across town from you, and the people across the state from you, and the people across the country from you, who don't have those assets. It's highly destructive, and we live in a society with other people. So if we have a society which is in tumult because people are so angry that they've watched their work and their effort just go to nothing, it's a disaster. This is a horrible thing.
Yeah, you'll have revolutions and wars.
It's not. It's awful. It's awful for us. It's awful for other people. So,
Tina,
it's a big problem that needs fixing.
Are we getting a taste of that right now in America?
I think so, actually.
Yeah, it feels like
I actually think so.
Some of our discussions have been about some of the societal issues that have gone on. Like, and we've just they're challenging us at this moment. Is that what we're facing right now? I think that's
the underlying battle that's happening. I think it's expressed in ways which are non-productive, but I do think that's the underlying battle. If I had my big ask, my really big ask is that average people just own some Bitcoin, because it's going to go up so much, it's going to still change their lives financially. Yeah. And find a way, and they won't buy it. They won't buy it here. I'm certain of it, because that's not human nature. They'll buy it.
But then they'll be priced out.
No, they won't, because the price is going up a lot.
But not have the opportunity for.
Well, the appreciation. I think the appreciation will be so huge in this coming decade and a little bit beyond that, that even small amounts of money will turn into, in today's buying power, without hyperinflation, without any of these other things happening, will turn into so much value that it will really be enormous for their lives.
What a wonderful thing to think about if people will just, make the move.
It's hard. It's hard because
There's so many there's so many like roadblocks mentally and then dexterily to kind of get to Bitcoin. Like it's not easy.
Well, there are, but we're building out enormous on-ramps.
Mm-hmm.
So CVS, Rite Aid, 7-Eleven are going to have ATM kiosks where you'll be able to buy Bitcoin.
Mm-hmm.
I think you're going to see utter madness in the next 1 to 3 or 4 years in buying Bitcoin. I think you're going to see what people can't imagine. I expect at some point down the line, lines out the door at those CVSs buying Bitcoin, where people will be lined up at ATMs, desperate to own some, desperate to buy some.
Because of the destruction
because
money?
Because Bitcoin, because of its fixed supply. No, because of the price of Bitcoin going up, not because of the destruction of money, just because of the price of Bitcoin going up, and that's what people do. So when you have $1 billion Powerball, you see lines out the door for people buying Powerball.
Sure.
That's what Bitcoin's going to look like to people. They're going to think Bitcoin is the Powerball that pays off.
You have to, Tina. You have to tweet that. That is such a concrete example, and those are the things I try to extract from people. I love that example.
It's something that I
realize. Yeah, they won't realize to the level that you've thought about Bitcoin and its effect on the world. It becomes the $1 billion Powerball opportunity because people just.
Well, no, that's not. Wait, no, that's not what I said. That's not what I said.
All right,
I didn't say that. What I said was the lines out the door will be like the $1 billion Powerball.
Yeah, I get it.
Buying a small amount of Bitcoin, buying $100 of Bitcoin is not going to make you a billionaire. I did not say that. I'm not saying that.
But
I want to really be clear. I'm not saying that. That's not what I said. So
right.
I don't want you to take what I said and twist it into something else. What I'm saying is that I think the madness to buy Bitcoin will be such that you will see lines out the door like you see with $1 billion Powerball. That's what I'm saying. Because I think people will be very desperate to buy it. I think Bitcoin has a fundamental nature because of its fixed supply, and I think that what we're going to see in the coming decade, it's going to express its nature and fool a lot of people who think they know and understand how it works and how it trades today based on the past 10 years and what the next 10 years will look like. And I think because up until now, we've been so early in this process, we've been in an incredibly volatile market for the last decade. But I think now this is a possibility. It's not, it's my guess as to how it behaves. I think we will see extraordinary upside, and I think the bear markets will be greatly subdued in the coming cycles. Now, it may not be in the next cycle, it may be in a cycle after that, because I think that as people come to understand how valuable this thing is, when you have what has been for Bitcoin relatively small price declines, 30, 40%, people who don't own it will feel the need to buy it and will, as a result, keep that price elevated and not go down 70, 80, 90%. It will go down less because their understanding of this thing is much greater than it was previously. So when I talk about the process of hyper-Bitcoinization, a lot of things are happening. Development in the Bitcoin ecosystem is happening. People's understanding in terms of the numbers of people having greater and greater understanding is constantly growing and expanding. It's the value for Bitcoin is what I like to call the network of hodlers. It's that network of people who want to hold that value. So traders think, oh, we're adding a lot of value because we're buying and selling Bitcoin like crazy. We're adding liquidity, to which I say you're really not adding any liquidity. If I buy 1 Bitcoin today and go sell that 1 Bitcoin tomorrow, I've temporarily added some liquidity, but I haven't really added liquidity. What really adds liquidity is the guy who buys it today and doesn't sell it for years to come or peels off small amounts of it. They've actually added real liquidity to the market because they're holding that value. Buying and selling doesn't actually create liquidity. Exchanges and brokers might like to try to convince us of that, but it's really a bit of a false notion.
What about the miners' impact to your liquidity thesis?
What do you mean?
Well, some miners sell into the market almost every day to cover OPEX, sell their Bitcoin if they're mining Bitcoin, and they're creating a natural liquidity.
Sure. I think that I'm not a mining expert, so let's start with that. So let's take everything I have with a large dose of salt, because I'm not saying that I know a lot about mining, because I don't. For me, the correct way to mine is to be thinking of oneself as a very, very long-term hodler. I think to me, the ideal miner, the ideal position to mine in would be that you're going to mine and you're not really going to sell anything until you're into your next cycle. So let's assume your price goes up 10x in the cycle. You need to sell, 1/10 of what you've mined to carry all your costs for a cycle. I know that's not how it works on the part of many people, and I think there are many people who have overinvested.
Tina, how long is the cycle in your mind? Is it a halving cycle, or
I think it's probably a halving cycle.
Halving cycle, okay.
I think no, that's okay. I think the halving is
the cycle
incredibly important. I see price as being fragile, and so the way I like to think of the halving is sort of the reverse of the straw that breaks the camel's back. So if you add a straw at a time, it makes that heavier on the camel's back, but there's this magical, I'm sure there are engineers who can figure this out precisely, but there are probably too many variables to actually figure it out. So there's that one bit of weight that you put on that the camel just collapses. And I think if we think of price that way, the impact of the halving is on average every 10 minutes. So we want to think that halving is an instantaneous thing, but it's not an instantaneous thing. It's more like the reverse of the straws being put on that camel's back. So there's some point at which there's just less supply in the market. And as a result of that less supply, price, which is fragile, breaks to the upside. We also don't think of prices as breaking up. We think of prices as breaking down. But if you reverse it and you think of it in terms of dollars versus thinking of it in Bitcoin, the price is actually breaking down because Bitcoin's becoming more expensive versus your dollars. So it's counterintuitive.
You gain camel efficiency.
Huh?
I said you gain camel efficiency.
Gain camel efficiency. That's cute.
Really?
So in terms of a question you asked earlier about I consider hodling currently to be the highest and best use of Bitcoin. Why do I consider that? That seems absurd. Don't I have to transact with it? Because everybody thinks if I'm not transacting with Bitcoin, I'm not using it. Yeah. Well, I'm using it very efficiently because I'm transacting with my future self.
The majority of all participants in Bitcoin, when you look at wallets, are holding Bitcoin.
And yet there's plenty of activity on the chain for more than just holding.
But I think it's nearly 60% or greater. There's a legacy bucket of Bitcoin that's been held for greater than a year or 2 years, or you can take it out to 3 years. There's an amazing amount of people that share your perspective.
A year or 2, 3 years is not actually very long.
But that's the scope of my own analysis.
No, I know. But it's actually not very long. It's actually pretty short.
Yep.
And I think that people really vastly underestimate what the value will be in a decade. One of my big worries, I'm I'm the tail end of the boomers. And I think that many of the younger owners and buyers of Bitcoin will end up parting with their Bitcoin voluntarily by selling it at way too cheap a price. I think boomers will end up controlling Bitcoin. I think they will end up owning the bulk of Bitcoin because on average, boomers are much wealthier.
Yep.
And they will end up buying it and they will hold on to it. And the millennials who might have, and younger, who might have bought it and have what will be extraordinarily huge positions in 10, 15, 20, 30 years will sell way too cheap. If you sell at $100,000, they think, wow, $100,000 is a lot of money because I can buy it for $9,000 or $10,000 now, and I can sell it for $100,000. Wow, isn't that great? That looks pretty paltry against $3 million, $5 million, $20 million Bitcoin. In today's buying power, not in some future hyperinflationary buying power, in today's buying power. So you will have sold way too cheap. I mean, imagine there are people who control some of the best real estate in the world. The Grosvenor family in London, who he's an aristocrat, real estate people in New York who've owned New York real estate for 50, 100, 150 years.
Sure.
Who once they buy that real estate, they don't part with it. They hold on to it as tightly as they can because they know how valuable this thing is. Bitcoin will be the future money that the entire world uses. 100 million Satoshis is incredibly valuable. You should hold on to this with all your might, because if you're 25 or 30, by the time you're my age, it's going to be worth a staggering amount of money, have a staggering amount of buying power. You should squeeze this thing and hold it close and not part with it. Maybe you part with a small amount with the hopes that you can buy it cheaper. But you need to recognize that the way you think about the way it trades may change. And I think it will change, because as more and more people come to understand it, they will say, I got to own me some of that. Mm-hmm. And if they start to understand how valuable this is becoming, they won't part with it. Well, you can't buy what somebody doesn't want to sell. So if they own that landmark property in Midtown Manhattan and they don't want to sell it, they don't have to sell it because they're well capitalized, you can't buy it. The same will be true of Bitcoin. If somebody wealthy owns a chunk of Bitcoin, they don't want to sell it, you're going to have to pay up. So you may sell it at what you think is a great price, and it turns out that it was a terrible price because in not that many years, it's at dramatically higher prices.
Or Tina, it may trade like a growth company trades, where you pay a 10x premium on projected future price of Bitcoin.
Well, that's what I think. That's what
5 million, and you pay me 50 million for my Bitcoin.
Well, I think that as the understanding increases by more and more people, what you will see is you'll see front running of halvings.
Yeah.
Because
you believe that the halving is built into the price of Bitcoin?
No.
Because people don't understand it?
They don't begin to understand. There's a lot about Bitcoin that they don't understand. What's that?
It's such a simple concept. I've defended the position that the halving we just went through was priced into Bitcoin because it had just been beaten to death before the halving. But there's so few listeners, there's so few people participating, there's so few that understand it. You're saying there's no way that it's priced in.
What do you think? What do you think Bitcoin is worth today, right now? Not what it's priced at. What do you think it's worth today?
I actually have a target in my mind that goes out to 221, which is so simple and
no, right? Not in 221. What is it worth today? What do you think Bitcoin? I'll tell you what I think Bitcoin is worth today. At a minimum. Yep. What do you think Bitcoin is worth today?
I think Bitcoin is worth $20,000.
I think Bitcoin is worth between $400,000 and $600,000 today.
Right now.
Right now. In fact, it was worth that a few years ago.
Incredible.
Why? Why do I think that?
Well, I mean, everything we just talked about.
No. But let's use a comparison. Why do I think that? You can figure this out. Why do I think that it's worth between $400,000 and $600,000 right now?
Are you basing it off of gold store to value?
Yeah.
Mm-hmm.
And I think gold. I'm not a gold fan.
Yeah.
I'm not a gold fan at all. I think Bitcoin. I think Bitcoin will not be good for gold. Not be good for gold. I think that Bitcoin is 10 to 100x better than gold. Not in the future. Yep. Right now it's better by a lot. It's just not well understood, but it will be. People will understand it. I guarantee you. I'm not that special. Everyone else or many other people will figure out what I've figured out already. Yep. Many smart people will figure out what I figured out. I'm not that special. They will come to this conclusion. And today, I think it's worth many multiples of gold. But I think today it's worth a minimum of 1 times gold.
Wow.
Which would be somewhere between $400,000 and $600,000 of Bitcoin.
Incredible.
So selling Bitcoin now is insane from my perspective.
Simply because of the ground Bitcoin made up on the last halving and stock to flow.
No. Because of what this thing is, because of its. Oh,
well, I'm saying, how did you arrive at that price?
Well, the price is based on price is based on gold.
That's right. So that's what I'm saying.
Gold, because but it has nothing to do with how it traded. It has to do with its qualities and characteristics.
Right.
Your partner uses a term that I recoil at, that bothers me tremendously. I can't get Pomp to stop saying this.
Hit me with it.
I'm going to use this on the podcast because maybe he'll listen. Money is not a social construct. Money is a good with certain qualities and characteristics. Now, the values that we have for those qualities and characteristics is how we determine the value of a money. So I have very low value for gold and very high value for Bitcoin. But money is based on that good's inherent qualities and characteristics. Bitcoin has certain qualities and characteristics. It's fixed supply. It's relatively easy. It's relatively easy to secure. It's portable. It's infinitely portable because it's infinitely light. It is. Hold on, I want to open up just find something here. Help me with my failing memory. Give me a second. It's easily transactable at a distance. It has transaction finality. Gold is heavy. Gold is cumbersome. Gold I cannot transact at a distance. I have to hand gold to someone else. I can send Bitcoin to you, or you can send Bitcoin to me over an over communication line. Bitcoin is much, much better than gold. But this is not a social construct. These are characteristics of this money. And we each put value on those characteristics. And we say these characteristics may be important to me. Those characteristics are not important to me. So, but this is true of all money. All money is a good which has certain qualities and characteristics. It's not a fantasy that exists in our head. It's not an illusion. It's not something we make up. We say that, but it makes no sense whatsoever. Mm-hmm. Why don't we want to hold dollars? What do we know about its cash? Actually, I mean, if you think about cash, cash is fantastic. US dollar cash is wonderful. I can carry it around the world. I can buy things from you and nobody else has to know about it. I can buy things from you and you don't have to know who I am.
Yes.
Cash is wonderful. What's the biggest problem with cash? they make too damn much of it.
Right.
So it becomes worthless over time. If we were in a different kind of a monetary system, Bitcoin might never have gotten created. But we live in a system where we're constantly in need of producing more credit, which kind of looks like money, but isn't. And so we start to not value that characteristic very highly because we don't like the fact that you can just willy-nilly make more of it. And then some people get better access to it and they can buy things ahead of us. And so they benefit more. So in 2008 and 9, credit wasn't widely available to people. And shortly thereafter, some investors got easy access to credit so they could buy up a lot of housing where the prices had gone down 50, 60, 70, 80% and buy it up from people who couldn't hold them anymore for various reasons and got to buy those assets on the cheap. And then once they held those assets, other people couldn't buy them and they could wait in some period of time and more than recoup their money or maybe even sell them for more than what they were valued at the time before they cratered. So it's not, money's a good, it's not a social construct. And it's not a social contract either. That's also wrong. It's not a contract. We place value on those qualities and does that make sense to you?
Of course. Mm-hmm.
And do you understand the frustration that I have with Pomp and others for using this term? It's really wrong-headed because it's not an illusion. Mm-hmm. We actually do understand the qualities and characteristics of these things, and we make decisions based on them. So I value Bitcoin much more highly than I value gold. Mm-hmm. I use it as a useful comparison, but I actually hold it in pretty low regard. I owned gold and I sold all of it and will never buy gold again. I actually hate gold. Mm-hmm. I think gold is a terrible money. I think it's a failed money. I don't think gold will ever be money again. And I think gold will actually become completely demonetized versus Bitcoin. And I think you'll be buying it it'll be priced in pounds.
Right.
Not British pounds.
Right.
Weight pounds. I think you'll be buying it at $100 or $200 a pound.
Not ounces. Not
ounces. I think it will be a disaster for gold holders. And I think it happens fast. Less than 10 to 15 years.
Wow.
Here's how I get there.
You better be listening. My uncle is a big time gold bug.
Here's how I get there. Mm-hmm. So what do I think happens? I think, and this is all, bear in mind, this is important. This is an assumption that I'm making. And my conclusion that I'm giving you is based on this assumption. If this assumption is wrong, I am wrong in what I just said.
Yep.
Okay, so take that. At some price of Bitcoin, holders of gold will look at their gold and they'll look at Bitcoin. They will scratch their heads and they'll say, I didn't think Bitcoin could do that. I own enough gold.
Yeah.
And I don't need to buy any more of it. And when they say that to themselves, that's not going to cause the price to drop immediately. What's going to cause the price to drop is when gold buyers say, I own enough and I don't need to own more, there are still natural gold sellers in the marketplace. Who are those people? That's a question to you. Who are those people?
Well, you have retail. So
no, who are the, no, there's natural. There are natural. Retail may or may not be a natural seller. They may be able to hold. Who are the one and only definite natural sellers of gold that exist in the gold marketplace?
I mean, you're talking about exchanges?
Nope.
Miners?
Yep.
Yep.
Why? Why are gold miners natural sellers?
It's they're spending tons of money to extract this stuff from the ground. They've got to sell it, or they don't have a business.
They have to sell.
They have to sell it.
They have to sell. They're natural sellers. They have to sell. There's 170, maybe 180 billion dollars worth of gold that comes to the market every year. That's a lot of gold.
Yep.
And
when you have no buyers and you're producing, you have a collapse of the business.
Right.
It's over.
And price goes down. Pricing does not happen on the average. Pricing happens what's called on the margin. It's the marginal buyer and seller that sets prices, not the average. The average doesn't matter. Marginal buyers and sellers. Marginal means that incremental buyer and seller that's coming to the marketplace. They are the setters of prices in everything. That's not just gold. That's the way economics works.
Mm-hmm.
Do you understand that?
Yeah, I do. And Tina, can gold age out? Can it just age out?
What do you mean by that?
Well, I'm thinking to myself, Generation Z, Gen X, millennials may not be interested in buying gold anyway. So you have boomers.
Yeah, yes.
And they just converge to a tech gold.
Yes, I believe that. I've heard arguments against it. People say, "Oh, the Indians, they'll buy it no matter what. Oh, the Chinese will buy it no matter what." I don't agree with that statement.
Mm-hmm.
People tell me, "Well, it's been around forever." That's called Lindy. It's been around so long that it has to keep going around. I think the Lindy argument is weak when it comes to technology. Things which are much better can replace existing things.
Yeah.
And I think this can happen incredibly fast. I use the argument of horses and automobiles. And we saw automobiles replace horses as the way that we got around pretty fast. Now, cars were expensive, so it did take some time. But this process happened very quickly. We saw it happen with film and digital pictures. Eastman Kodak went bankrupt very quickly, even though actually they invented digital pictures. So this sort of thing happens all the time.
Yeah.
People respond, they say, no, gold is different. I don't think so. Gold's not any different. And I think for people who hold steadfast to that gold, assuming the price of Bitcoin goes up a lot, like I think it will, they will get completely wrecked.
Yeah.
They will lose everything. I mean, they'll lose more than 90% of their value, and it will never come back. I don't think it comes back, not anywhere close to their lifetimes, unless there's a technological use.
Governments that are backing, they're holding gold.
I think they'll get destroyed in value too.
That there's going to be huge destruction of that store of value that governments have banked on.
Yes, it'll just go away. And this is a very hard, I have a lot of ideas that are very hard for people to accept and understand. It's my view of the world. I think these things happen incredibly quickly. And I think we see lots of examples of it. And then we sometimes argue that we think this thing's different. I don't think it's any different. I think it's the same thing. And I think it happens staggeringly fast. I do say to boomers and older people that this gold will get sold ultimately. Either you will do it or your kids will do it. And I do agree with you that younger people won't own gold. People will argue and they'll say, well, younger people in other parts of the world will own it. I don't think they will. I think that people misunderstand money. I think in order to understand gold and Bitcoin, you have to understand money. And I don't think money is particularly well understood. I was actually, I used to own gold. I used to be a bit of a gold bug. And a lot of the gold guys would talk about the qualities and characteristics of money. I am incredibly disappointed in these people. And I've come to think of most gold bugs in some pretty negative terms. I don't want to express, huh?
Like Peter
Schiff. I'm not naming names.
Yeah, no worries.
But I don't want to name names, but there are people who I don't think particularly well of them.
Because do you just feel like they're lying to people? They're just
I think either they don't understand themselves or they're lying. They may not understand. Not everybody understands everything.
Yeah.
Not everybody comes to the same conclusions as other people do.
Sure.
Some people bought and held Microsoft in 1990 and just held on to it and never parted with it. And that $10,000 worth of stock in 1990 became worth
Tina,
several hundred times more.
Yeah, and I did the reverse. I bought Cisco Systems in the early 2000s and held it forever. And it's worth the same or less.
Well, we have to understand the investments we make, but I think to understand Bitcoin, you have to understand money.
Mm-hmm.
So, you know,
may I?
Sure, go ahead.
Because I want to be a good steward of your time. I'd like to just get 5 to 10 more minutes of your time and then call it.
Sure. We can do this. We can do this again if you want.
I would love to.
Yeah.
Tina, I cannot tell you how grateful I am for you. One,
my pleasure.
Sharing your knowledge with me individually, because it will change my approach. I always tell people I have huge conviction, but when someone offers me something that I can reflect on, understand, really hear, I'm happy to change my mind.
Me too.
Happy to change my mind.
Me too.
I would love to understand your suggestions on custody of Bitcoin, because I tweeted recently, most people don't understand the complexities around being your own bank, and how you have to structure this through wills and trusts and see.
Okay, I'm not an expert in this department.
No worries. Just
no. I won't comment on it because I'm not an expert. I'm not an expert, and custody is important. I do not consider myself a technical expert at all.
Do this for me.
I do know some things.
Do you suggest to people self-custody, third-party custody, professional custodians? I'm just trying to gain your perspective or opinion.
I think we are, in everything about Bitcoin, we are in hyper-Bitcoinization. I think in the end game, most people will essentially self-custody. They may even self-custody with the help of custodians.
Yep.
I don't know exactly what that will look like.
Yep.
We're watching a lot of things get created and form. I think you want to ultimately hold your own money. Think of Bitcoin like cash. You want to hold your own cash. You don't want somebody else holding it. There may be ways that get developed for you to basically.
Tina, I've never held my own cash though. I mean,
the problem is with a trusted third party.
Yeah.
And one of the reasons why you never held your own cash is because you couldn't easily hold your own cash. If you were worth $1 billion, how
do you hold your cash?
You can't hold your own cash.
Yeah. I mean, and I think about like gangsters, and when I was a young kid, I used to have a wad of money with a rubber band around it, and it may have been all my money, but I think about how ignorant that was. And I may be wrong in my thinking, but it felt now as an adult, what a stupid thing to do.
Not necessarily, because there was not the means or technology to do so.
Yeah.
But you could hold $1 billion worth of Bitcoin yourself and custody it with the technology that's available. And this technology is evolving. We're not, there are a lot of things that are they're in development and will continue to be developed over the next year, 2 years, 5 years, 10 years. This is a process, not an endpoint. And I didn't buy my first Bitcoin until fall of 2017. A comment that I heard somebody make was that the easier this gets, the higher the price will go. Bitcoin in its very early years was extremely hard to hold. You had to be very technical. I'm not that technical. I'm not a computer programmer. I actually pretty much suck at that. I did terribly in classes that I took years ago. So I'm not good at that. It's relatively easy to do today. It's actually quite easy to do. I took time to learn it.
Yeah.
It's amazing what you can learn when you decide you want to learn and are willing to put in the time and the effort. Things which are important to us, we take the time to learn.
Yes.
Things that aren't important to us, we don't put in the time and take the time to learn. There's a lot that can be learned that's not that hard, but we don't value it, so we don't put in the time and the effort.
Totally agree.
But that it's just that simple. I do think the process will get easier. If I told you that if you put $1,000 into Bitcoin and you really believed me and you thought it was a thing that was going to happen, put $1,000 into Bitcoin and 12 years from now it was going to be worth $500,000 in today's buying power, you probably and you believe that and you knew it to be so.
Right.
You'd buy the Bitcoin.
You'd learn
and you'd learn how to do it.
That's right.
Because it's important to you.
Yeah.
So right now it's not that important to people, and so they don't put in the time, but they will over time. And I think there will be things which change along the way. I think it's both harder and easier than people want to acknowledge.
Yes.
It's easy to make mistakes. Who did I send this to? I sent this to somebody the other day. This was a good tweet, and I can recount that here. Never work with your Bitcoin when you're, let me find the tweet, it'll be easier, make sure I get everything. What did I do with this? I sent this to a woman who actually was interested about custody of her Bitcoin.
Mm-hmm.
What was this tweet? Oh, here it is. Okay. So somebody berated people. What did they say? Oh, person said, do you double check the Bitcoin addresses before sending, or are you a man? Which I thought was an incredibly stupid tweet. I thought, wow, you are really an idiot.
Right.
And I said, a woman answered, so mean, I always check. And she's just laughing out loud, and then she's sitting, a GIF is sitting of a woman sitting, putting a box over her head for shame and embarrassment. And I said, me too, I like keeping my money. Dumb mistakes are for idiots. Never move Bitcoin when you're tired, drunk, high, busy, or distracted.
Yeah.
Because this is fragile, and you don't want to take the chance of screwing it up.
Yep.
So be concerned about your money. Don't do stupid things with it. And I think, now this is my guess, I don't know for sure, but I think that most Bitcoin has been lost due to personal error.
Yeah.
You are your biggest risk in Bitcoin, but you don't have to be.
Yeah.
You need to think about these things. You need to think about what you're doing, and you need to put in the time and effort. If you're going to be sloppy and slipshod about it, you can make a mistake, and these are unrecoverable mistakes. So whenever you're working with it, start small. If you're moving Bitcoin from an exchange into your wallet for the first time and you've never done it before, and you bought yourself $2,000 worth of Bitcoin, move a small amount. Move $5 worth of Bitcoin. Move $2 worth of Bitcoin. Practice. Yeah. Make sure you get it right. The wallet that you've created, make sure you've written the seed down correctly. What's the best way to do that? And you should probably use a good passphrase. And that's harder than most people realize. Erase the wallet. Recover the wallet. Send $5 worth of Bitcoin to your wallet. Erase it. Wipe the wallet. Recover the wallet with your seed phrase and your passphrase. When you see that your Bitcoin is sitting there, you know you got it right. Your seed phrase is good. Now you can send the rest of your money to your Bitcoin wallet. Do things small. Practice. Get things right. Take your time. If you got kids and they want your attention, don't do it then. Yeah. Do it when you've got time to focus. Don't do it when you're tired. You'll make a mistake. Don't do it when you're high. Don't do it when you're drunk. This is silly advice, but yeah, it's just common sense. I mean, don't go drink and drive. It's not going to end well for you. Yep. Just treat it like that, and just use some common sense. The things that people don't know or don't understand. Don't take a photograph of your seed phrase. Your seed phrase should never touch the internet, because you're at risk if there are viruses and bots and all sorts of things out there which can find your seed phrase potentially. There's phishing. There's all kinds of things. But then that goes to personal mistakes. If you never do that. My wife came in my office and she was going to take a picture of something. I said, "No, put the camera away. I'm working with this. No, don't do that. You can't have a camera in here when I'm doing this.
Right.
Because your camera will pick up things that you may not know. And then it may be somewhere forever that you don't even know about. And now your money disappears because somebody found it.
Yeah.
You need to educate yourself. So that's what I have to say about that. I do want to get into the DeFi conversation. I understand if you have to go. I heard your kids and your family needs to get into the kitchen.
Well, this is what I would like to do. I'd love to do this again and hit DeFi because I think this is probably a 2 or 3 part discussion.
Oh, sure. I need to know your definition, what you mean by DeFi, because I have my own thoughts on it. So I'll just give you. I think in a Bitcoin-only world, pretty much debt and credit won't exist. Mm-hmm. Maybe some trade credit because of Bitcoin's deflationary nature. I think because of Bitcoin's volatile nature, I think the use of debt and margin in the ownership of Bitcoin is an enormous mistake. And in time, I'm fundamentally opposed to the idea of interest on Bitcoin. I think it's a mistake. I think that the people who borrow against their Bitcoin are making a huge mistake. We saw in March how much Bitcoin declined in one day. Even with 2 times margin. People in the Bitcoin space are crazy. I come from trading stocks, and the amounts of margin and leverage and credit that people think they can use in stocks is a fraction of what they think they can use in Bitcoin. And Bitcoin is a much more volatile asset. We see the volatility we see because people are just idiots in the way they use it. Now, it works a little bit differently because it's more like what might have been called a knockout option than it is. In the stock market, if you had $1 million portfolio, your whole portfolio might be at risk against the position you take because the brokerage firm will use that as the collateral for the position you're taking. You can do things a little bit differently in Bitcoin. In places like BitMEX, you can put up 10 million sats or 100 million sats and then take on a lot of leverage because it's a knockout. You get knocked out of your position, and that's the only risk or exposure you had. So people treat it differently. They're willing to take more leverage. But suffering by the death of 1,000 cuts can be pretty bad in the long run. And I think that the way people do things is a bit of a mistake. But when people take loans against their Bitcoin because they have a lot of Bitcoin, they don't want to spend it. We saw market move more than 50%. And if you had a 2x loan that you were borrowing to get cash for your spending, you'd have been way better off selling some Bitcoin, paying your taxes, and not exposing your account to this risk. I have to question whether or not causing people to suffer the loss of their Bitcoin is part of their business model. And if it is part of their business model, which I think it is, then these are scummy businesses that you don't want to be in. And you guys may or may not be invested in some of these businesses. And I don't know. I can't follow it. But
no, I am because BlockFi allows interest-bearing accounts and leverage on your Bitcoin.
Right. And I think those are very bad investments for you guys because I think in the long run it's not where you want to be. So if we think about this as hyper Bitcoinization as being a process, there'll be a lot of mistakes that get made. I think you want to be in the places where you're building a business which benefits from what the end game is and not from what the new paradigm
intermediary stage.
What's that?
It could be just an intermediary stage.
It is, and I think it is an intermediary stage, but I don't think that's where you want to spend your time investing and building a business. I think you want to think longer term time horizon, and I think you want to be in businesses that you want to skate to where the puck is going, not to where the puck is. Yeah. And I think of businesses like that, and I don't want to pick on them, but I think of businesses like that as legacy paradigm.
Yep.
You don't want to invest in legacy paradigm. You want to invest in what the new paradigm is going to be, because this may happen a lot faster than you think. And enough of these things happen, and those businesses don't look so good after a little while. And people say, yeah, I don't want to put my money there. So don't put your money into those types of businesses. And I think there are a lot of people in, quote unquote, in this space who are investing according to legacy paradigm and not thinking about Bitcoin's inherent nature. And I think what you want to do, the most successful investments, see, for me, and I'll leave you with this on an investing perspective. And you guys can feel free to hire me if you want, because I'm happy to earn some money.
I'm writing it down.
That a business which, through the Bitcoin ecosystem, and I like to say not just Bitcoin, but the Bitcoin ecosystem, which solves a legacy problem that legacy solutions can't solve, it's going to make a lot of money. That's where you want to be. That's the big, that's, you know, other than owning Bitcoin itself, that's exactly where you want to be in this. And you don't want to be investing in legacy paradigm businesses in Bitcoin. You don't want skeuomorphic design. Skeuomorphic design is where you build a car and you put reins on it to steer your car. That's what BlockFi is. You put reins on Bitcoin so you drive your car. That's not what you want to be in. That's not the business you want to be in. You don't want skeuomorphic design businesses. And that's a big mistake. That's not a good long-run investing philosophy. Yep. You know, think about where the puck is going, not where the puck is, and invest accordingly. And so Bitcoin is not equities. Bitcoin is money. Money wants to go to one. Now, there may be things which get in our way, but I think ultimately Bitcoin's inevitable. I think it's pretty unstoppable. I think governments ultimately will get co-opted by it. I think Bitcoin is like a gecko right now, which will grow to the size of a 10-mile high Godzilla. And when Bitcoin walks, governments will tremble. That's what I think happens. I think it happens fast. And I think it's underestimated, which is a great thing. This is going to happen really, really fast. And I think people underestimate the speed at which this happens. And I got my first computer in 1982. It was an IBM PC with DOS on it. And I've seen in the last almost 40 years how fast these things happen. These happen incredibly fast. And Bitcoin has an added advantage over these other technologies in that there's a price on Bitcoin. So people are going to FOMO like crazy. Richard Russell, I used to read Richard Russell's, he's passed away, Dow Theory letters he started writing sometime in the 50s. And he used to say, there's no fever like gold fever. Well, I can tell you this, along the lines of my comment earlier that I expect to see lines out the door for buying Bitcoin at CVS and Rite Aid and 7-Eleven and anywhere else there are Bitcoin ATMs, there's no fever like Bitcoin fever. And so I think there are certain, you have to look at what Bitcoin's inherent nature is, and then you want to invest accordingly. And that's the fundamental problem I have with DeFi. It's not the D part so much as the Fi part, because I don't think finance as it exists will exist in 14, 15, 20, 30 years. Yep. Just won't. It'll just be different. And things happen incredibly fast.
So DeFi is skeuomorphic design to you?
I think so, yeah. I think it's skeuomorphic design. I think you're taking the legacy system and you're just trying to take, you're taking something which is incredibly powerful and making some huge mistakes with it. It's just, it's terrible investment philosophy.
Interesting, because that is, I would say, your statement around taking legacy infrastructure and bringing it into the digital age is one of the pillars of our investment strategy.
And that's skeuomorphic design. That's a terrible strategy. Terrible strategy. Right. Terrible strategy. It's a loser strategy. That is a disaster because it's going to go away, and it's going to go away much faster than you think. I'd get out of all of those investments right now.
Right.
Sell them to somebody else who doesn't get it.
It's an investment in an intermediary time period that is way shorter than I even think.
Right. Well, I don't know how long it's going to be, but it could happen much faster.
Much faster. Right. So it could antiquate this bad design even faster.
Well, particularly from an investment perspective.
Yeah.
Because once other people figure this out, what do you think your investment's going to be worth?
Yeah.
Not much.
It'll be leapfrogged. You'll be holding tons of gold that's worthless.
Pretty much, yeah.
I get it. I get it. No,
so Lotus 123 really that changed computers from being seen as desk weights and toys into being very valuable things that businesses had to own.
Mm-hmm.
So I was there. I had VisiCalc and I got Lotus 123 back in the mid 80s sometime. I don't remember exactly when. And I had a PC before then.
Yep.
So when I say if you invest in the legacy in the business which solves a legacy problem in the Bitcoin ecosystem, that will explode. Now, I don't know what that is. I'm not that smart. I might be able to see it. I might be able to understand it if I see it.
Tina, it's really hard.
What is hard? Of course it's hard. Of course it's hard.
Really hard.
But that changed the way businesses saw personal computers.
Right.
And that will happen in Bitcoin as well. Now, personally, I think just HODL is enough reason to own Bitcoin, but there will be businesses and or applications which figure out solutions to existing problems that Abra, I think, is actually a great example. Abra solves a problem using Bitcoin. Abra is very interesting. I think they're making mistakes into some of the other crap they go into. I wouldn't sell. I wouldn't sell other cryptocurrencies. I'm very negative on other cryptocurrencies. I wouldn't own them. I don't own them. I think you only want to own one thing. I don't think you want to diversify. I would not own a digital asset index. I think that's a huge mistake. Mm-hmm. I think you only own Bitcoin.
Yep.
If you don't own only Bitcoin, just buy stocks. You don't even belong here. You don't even know what you're doing. Because these other things aren't going to exist because Bitcoin's going to squeeze them out. People, look, I've traded stocks for a lot of years. I spent years arguing with people back in the 90s on AOL and Yahoo chat rooms about the stupid things they were buying. They don't listen to you. People won't listen. So they're going to do whatever they're going to do. People will buy altcoins. I don't care. It's not my problem. Mm-hmm. Bitcoin will ultimately cause those to go to zero.
Yeah, because my position on DeFi and my definition is just my own, and this was going to be the direction I took that discussion. It's DeFi is smart contracts and money Legos on top of Ethereum. So I'm just looking at DeFi as being built on Ethereum.
Right, but do you know about what's it called now? Russell O'Connor, Simplicity. Have you ever heard of Simplicity?
I have.
What is it?
Oh, I'm sorry. I thought you were talking about Russell O'Conn's.
Russell O'Connor. Russell O'Connor.
No.
You know what Simplicity is?
I don't.
You might want to learn about it.
Yeah.
Russell O'Connor.
He
works at Blockstream. Yeah. So you're investing in DeFi and you don't know what other people are doing in the space.
Well, no, I've just started looking.
No, I understand. I understand.
I understand. Kind of look, kind of thing.
No, I get it. What I'm saying to you is that beware of marketing pitches.
Yeah.
Versus something that's real. And look, I don't know a lot about that, but I don't think most DeFi as it's construed will exist because I think it will completely reshape finance. It's not the D part that's the problem. It's the Phi part that's the problem. Mm-hmm. And so you don't want to, you don't want to put reins on your new car.
I love it.
That's a classic example of that.
Yeah,
I'm sure there are other examples too.
Look, Tina, I definitely want to explore. If you would be so kind as to give me some more time in the future, I'd love to continue down this rabbit hole. I mean, super informative. You certainly not only challenged some of the things I've thought about, but changed my mind and approach to things. And I think that may be a good thing.
That's my goal.
That's right.
That's why I talk to you, because I want to change how you think about things, and I want to influence your partners too. I want to change how they think about things because they're important voices in the space. I want, through you, I can get to them too and cause them to think about it differently.
Yeah,
because
and I
I
can
think
assure you, you have and will.
yeah, that's wonderful. Because I happen to really like your partners a lot.
Yeah,
I really like them. I like Mark a lot. I have a lot of respect for him. I think he's incredibly smart. I like Pomp a lot too.
I appreciate that very
Yeah,
much.
I like them both, and I think you guys are. I think you guys are important voices, and I think you're doing really great things. And if I can through my ideas and my thinking, cause you to think about things the way I think about it, I have a very arrogant point of view. I think the whole world will bend to my opinion. They just don't know it yet.
I love it.
Bitcoin will be the one and only money accepted everywhere.
Yeah.
And it is part of, it's an emerging paradigm. It's not just Bitcoin. I think this emerging paradigm is happening elsewhere with exponential technology. And we'll always invest. I think the whole nature of investing will look very different in the future because of Bitcoin's deflationary nature. And we can go into that next time.
Sounds great. Listen, you take care, and we'll talk soon.
Thanks, Jason.
Thank you. It
was fun.
Bye-bye.